The Japanese economy is currently pausing in certain sectors, but maintains a moderate recovery trajectory supported by record corporate profits. This transition, the growth handoff, marks a shift from external exports toward internal demand, driven by wages and corporate profitability. Current macroeconomic vitals show that both personal consumption and overall production are now steadily picking up. This domestic progress contrasts with external weaknesses. Exports are lagging, as the recovery in auto-related sectors is currently only halfway complete. July saw a significant upward revision to capital expenditure, driven by new investments in software and infrastructure. Although housing construction saw a downward revision, structural improvements in corporate profits are successfully funding the capital investments required for long-term growth. Historically high corporate profits are now feeding back into the domestic economy to activate a new internal growth mechanism. These profits resulted in a 5.10% spring wage hike, which is now shrinking the negative margin in real wages. This shift is intended to increase household purchasing power and support broader consumer spending. While consumer confidence is rising, actual spending on goods remains flat due to high prices. The recovery is currently being sustained by structurally robust service consumption. Inflation mechanics are shifting from cost push factors to demand pull. As government energy subsidies end, the focus is on whether costs can be successfully passed through to service prices. This domestic progress faces a headwind from extreme exchange rate volatility between June and July. The weak yen added a 130 billion yen penalty through elevated import prices, neutralizing gains from auto exports and inbound tourism. This depreciation is a direct currency drain, expanding the July trade deficit to 450 billion yen. The primary policy goal is a complete escape from deflation. Success requires navigating external threats, specifically the downside risk of a stalling Chinese economy and shifting U.S. employment trends. Internally, we are monitoring financial market volatility and the risk that rising prices may impact consumer spending before real wages fully turn positive. Thank you for watching the Japanese Economic Review. We look forward to having you again.